Now let's move to the next step, which is to post those journal entries to your ledger accounts. And here we use T accounts to illustrate. So first of all, the first entry is debit cash 50,000, credit common stock 50,000. So we have a cash account, debit cash 50,000, which is from transaction A, and credit common stock 50,000, which is also coming from transaction A. Transaction B is to debit equipment 20,000, credit cash 20,000. So here, equipment, debit equipment 20,000, credit cash 20,000. Transaction C, debit prepaid rent 6,000, credit cash 6,000. So debit, we have another account here, prepaid rent 6,000 coming from transaction C, and credit cash 6,000 also coming from transaction C. Transaction D, debit inventory 38,000, credit accounts payable 38,000. So this is we need two new accounts here. Debit inventory 38,000 coming from transaction D. Credit accounts payable for 38,000 also coming from transaction D. Transaction E, debit cash 30,000, credit notes payable 30,000. So debit cash 30,000 coming from transaction E, and credit notes payable, which is a new account, 30,000. The next one, transaction F, debit accounts receivable 40,000, credit sales revenue 40,000, debit cost of goods 22,000, credit inventory 22,000. So debit accounts receivable 40,000. Transaction F. Credit sales revenue, which is also a new account, 40,000. And debit cost of goods sold, 22,000. Transaction F. Credit inventory, 22,000 coming from transaction F. Next one, debit cash 15,000, credit accounts receivable 15,000. So cash 15,000. Transaction F. Transaction G. And credit accounts payable, accounts receivable 15,000. Transaction G. Next one, transaction H. Debit accounts payable 20,000, credit cash 20,000. So accounts payable 20,000. Transaction H. Credit cash 20,000. Transaction H. Next one, debit salary expense 7,000, credit cash 7,000. That's a new account. And credit cash, 7,000. Yeah, cash is a very busy account. Transaction J, debit utility expense, 2,000, credit accounts payable for 2,000. So utility expense is a new account as well. For 2,000. And credit accounts payable for 2,000. Transaction K, debit notes receivable 20,000, credit cash 20,000. Notes receivable is a new account. And credit cash. Transaction L, debit retained earnings 1,000, credit cash 1,000. Credit cash 1,000. So this is the fourth step, which is posting to ledger accounts.